Really excited to have all you guys here. Thank you so much for joining on for today's Zoom. A lot of exciting stuff, and we're going to go over everything with the new drop, the new back-end order matrix, and let you guys know exactly how to use this thing. I've had an amazing result using this thing so far. It's really, really good at calling out the liquidity zones where normal stop losses are for retail traders, and that's exactly where we're going to start entering. So without further ado, right here, this is the combo of the new lifetime membership of Profit Algo. We're using a combination of different tools. We're going to go over each and every one, starting off with the back-end order matrix, or also known as the bomb indicator. Alone by itself, this is how it looks like. I'm just going to put it like this. And we could use the standard colors for trading view, but with these candles on the charts, you don't really get a sense of trend direction. So I found out by putting the trend sync simulator tool together with the back-end order matrix, we could get a visual representation on what is the trend bias for any given day on any time frame. I'm going to go over the backend order matrix and what the settings do in just a minute, but without looking at the order matrix, where we can see there's sell side liquidity here and buy side liquidity here. And just to dumb this down, what that initially means is that there's an accumulation of orders right here with high volume. And there's also an accumulation of orders right here. So typically you would enter on a buy signal without knowing that there may be an accumulation of orders right where you are buying. And there may be a lot of stop losses at this level here. So the approach that we're taking and the approach that I used, especially on things like US 30, NASDAQ, any indexes, gold, anything that has a lot of volume. Time and time again, a lot of traders are getting stopped out because they have their stop loss in the exact entry of where the institutional traders are having their positions. So instead of, let's say, entering here, which would technically be an early entry, we can still utilize the price action buy and sell signals, but we can approach this as a safer entry, just waiting for price to come to this buy side liquidity and using the previous liquidity zones as a protection where to place your stop. This is one approach that we can use with just the buy side, sell side liquidity zones. So if we go back to, let's say, any part of the chart, I'm just going to choose like a random place. And we're going to look at this right here. And let's just go on a smaller time frame. Right here, perfect. Did you guys notice something from when I went to the smaller time frame? The liquidity zones actually got bigger. You can see that the gradient is actually much thicker. And this is something that you're going to have to go into the settings to control. And that is the layer half ticks. Basically, all of this information is inside of the publication of Prop from Algo. So all the info is there, but I'm going to explain it either way so you guys know. So for instance, if I bring this layer half height down, it's controlling the height of the actual zone. So if I put it at 10, you could see that it's extremely small. And the reason why it changes through different charts and through different time frames is because of the actual ticker. For instance, the amount of pips on US 30 is far greater than the amount of pips on Euro USD. We should all know that by now, but just in case, I'm bringing that up because it's really important. So sometimes you'll bring on the indicator to, let's say, a certain chart or time frame, and you may notice that the liquidity zones are very, very thin, and that is because the height is saying we're only going to draw this zone for 10 ticks, which is the center of where there's a lot of accumulation of either buy orders or sell orders. So in this case, if we want to have a better visual on, let's say, the 15-minute time frame, we would then put, let's say, 50, for example, for US 30. Now it's a little more readable and easier to see where those zones are, but you may have to have it at a higher, let's say, 500, which it won't make sense on this time frame. But if we go on to the 4-hour, now that 500 is going to be visually pleasing for you to see where the sell side liquidity is and where the buy side liquidity is. And it's basically just waiting for price to reach these levels. It takes a little bit more of patience than, let's say, entering on what we're used to, which is the buying and sell signals of profit algo. But we can use this as an advantage to, let's say we do have fundamental data that is bearish and we're trading on the 4-hour. At least we can take this level as a take profit from like this previous low, or vice versa. We know that there's sell side liquidity here, so we will not hold the trade past this area just in case. For example, if you're buying here, well, at least you can exit here. If you're buying here, then we can exit here, and vice versa when it comes to selling. You typically are not going to be wanting to be buying at the very top where the sell side liquidity is. So take that into account. So if we go to the Australian dollar CAD and you see that these zones are extremely thick, well, all you need to do in this case is open up the settings and bring this down, because it's based on the amount of ticks on that individual chart. So now you can see it's looking much better. So that's one thing that you need to keep in mind once you put it on whichever chart you're working on. It's a little tedious when you're going in between time frames, but what I do is, based on what the liquidity is showing on the chart, I'll just mark up my own little zone, draw up an alert right here. And this is the way that I would walk away from the computer, allow the alert to happen. I can't do the alert because of me being in the replay mode, but basically, if we want to let's say, go into a long order, we can typically enter at the institutional entry line, but you have to keep in mind that sometimes price may sweep liquidity. So you could take the institutional entry line as an early entry where you can take the chance and just go a little softer on the risk. Instead of risking, let's say, a full 1%, or let's say if you're risking $1,000, instead of doing it a full 1% on this trade, wait until price comes to this area to then do a heavier or riskier position for a more high probability setup. And the way that I was explaining to you just earlier is simply putting an alert right here, add alert, and then naming this buy side liquidity. Or you could just put BSL. So now when you get that alert, you know right away, okay, I got the buy side liquidity. Let me go onto the chart and then look how candles are reacting to this level. If it's breaking through, it might go to the next liquidity and then do a complete reversal. So that's the approach that I'm taking this thing as right now. And that is without even needing the signals, really. I'm using just this and the Backend Order Matrix, so the trend sync simulator tool and the bomb indicator, and that is everything you need. The actual price action indicator is an extra help. It does give an extra level of early entries, though sometimes I've noticed it does happen a lot, especially on US 30 and XAU USD and the S&P 500, where institutions are just swiping liquidity and you'll get stopped out and then the trade will go in your favor. If we look at this example here, we just chose a super random spot. Price is moving down to the buy side liquidity. And even if it comes extremely close, we can still use it as an entry, but typically you're going to want to wait until it's hit. Once it's hit, you could look to the left and see if there's any other zones. This looks like an area where we might see price retest. So it's quite a big area. Honestly, if we're going to put our trade under here, where we have our stop loss under here and TP right at the sell side liquidity, we look at the higher time frame. This looks like a healthy pullback on the 4-hour, and it's also near the bullish cloud. And I guarantee if we turn this on, it's right there at the 4-hour setup. So even without the price action indicator, it was already drawing up where the 4-hour long setup would be while we were trading on the 15-minute time frame. So from this point on, we have a solid setup, and we could risk, let's say, a little more than if we were to risk on the early entry on the price action indicator. And let's see how this thing turns out. Beautiful, beautiful. And there you go. So how many people were having their stop loss at this area at the previous low, because they're thinking, okay, if I put my stop loss at this previous low here, and that's what everybody's doing. That is what majority of traders are doing when it comes to break of structure, SMC, ICT strategies. They're always using the previous low. Even myself, for many years, I've put my stop loss at the previous low. So in this case, while people are anticipating a continuing of movement and they're having their stop loss at the previous low, we're literally waiting for that opportunity and entering with the institutions. It's a total different approach of what we're used to with using the price action indicator, or let alone any other tool or strategy. Because what you're normally taught is, okay, it broke out, now let's enter based on the breakout. But here, this was a breakout. This was a solid breakout right here in this candle. It broke the previous high. People started buying there. So it takes a little level of patience. This is going to take a while for you to switch your mind on how you're approaching your trading. But I guarantee you, with having patience and dedication and applying that risk management, you're going to start seeing a lot better results. So the idea is that with every lifetime member that's getting access to this, let's try to have everybody get funded with this strategy on a 50K account. If you're only paying $50 for a challenge and it only costs you $50 to renew it, then you can essentially full port a risky setup. And if you fail, just pay the $50 again. Now you're at $100, which is still cheaper than a 50K at a Forex prop firm. So that's what I'm doing right now to get funding, get access to capital, and then reinvest it into the company so we can roll out the risk management tool, roll out the MT5 and everything that was originally planned with the old owners. And I found this as a solution for us to actually have something in the meantime that is high of value. And if we just turn off the bomb indicator alone with the trend sync tool, what I love about this thing, it's so visually pleasing. It's not harsh to the eyes, and it's telling you volume-based trend on when it's bullish based on the white candles. You could see that the trend starts to die out once the candles are gray. And if it's trading below this cloud, then you have a stronger conviction to be able to start looking for short setups. So if for whatever reason you have another strategy that you want to use, you can use that to your advantage and use the buy side liquidity and sell side liquidity as a take profit or stop loss area. But keep in mind that price typically always wants to swipe liquidity because the orders of the institutions are so large. And in order for them to fill their orders, they need to be able to grab that liquidity so it doesn't, let's say, affect the instrument's price that they're trading. Because if, let's say, a huge institution were to buy gold and have a position worth of, let's say, 2 billion, right? And they're not swiping that liquidity, it can affect price. And right there is where traders have learned to place their stop loss. The settings that we have here is just a starting point. It's not a go all two for every single chart and every single time frame. Yes, it works on every chart, but you just have to make sure that, for instance, you change the layer height to the according time frame and the according chart, because each one is, again, different. So here's 500 on US 30 on the 15-minute, but then, like I showed you earlier, if we go on the daily, that 500 looks a little better. And you'll notice that with each and every chart, you're going to have to change it a little different. The other setting that we have here is the opacity decay layer. This is basically just telling you how many layers of the gradient you want. Let's say if you don't want if you want to have a bigger gradient, you would go as little as 0. But if you want it to be solid and you don't want the gradient look, you'll up the numbers and then it will create a solid line like you see right here. I personally like the gradient. I like the gradient a lot. It gives it a nice, easy perspective on where the buy side liquidity is and where the sell side liquidity is. And it's much easier than these book maps that you see or the other order flow, which to me is like completely confusing. So let me just put this back to reset settings, reset to default. And at any moment, you guys might forget, you can also just always go to the publication that was posted and shared. As soon as I finish this Zoom call, I'm going to be adding everybody one by one. It has everything that you need to know about it, and also the settings. So even it gives you examples on how to use it. So you always resort to this if you guys forget, and you could also reach out to me. But it has all the setting details in every single indicator and how to have the best approach. So that's one thing. Another thing that you have to do is, depending on whether or not you wanted to delete, you could control delete after X amount of bars. So once price swipes liquidity, the liquidity zone disappears. Because if not, you're just going to have a bunch of levels on the chart, and you could increase that if you wanted to, let's say, delete sooner or stay on the chart longer. So for instance, if I do 100, that means after 100 bars, that liquidity zone is going to delete itself. I hope that makes sense. That is the essentially buy and sell side liquidity and the indicator. And now we're going to move on to the trend sync simulation tool. And the way that you're able to swipe through these different clouds is through the trend sync here. Right now I have it on the Kumo section, which is a Ikumoku. I can't even pronounce that right. It's an Ikumoku cloud that is giving us this visual representation with a center line moving average to give it this gradient look. And again, to me, it's super pleasing to the eye. We have the PFA version, which is the actual cloud from PFA integrated with the gradient look to give it a nice aesthetic, very easy to see. And then the HMA, which is non-lagging, which is a different type of moving average. It's called a whole moving average. So you put HMA trading. See, the HMA trading refers to the whole moving average as a technical analysis tool designed to create a smooth, more responsive trend line than the traditional moving average. So this is going to help you have a better immediate result to understanding the trend than, let's say, your basic moving average strategy that everybody's using. It was a little complex to get it to work, but AI and back and forth in a bunch of hours, I was finally able to get it to work, and that's how it came out. What I've been using is the Komu Cloud Ichimoku, and I honestly love it. I honestly love it so much. And again, just with the Ichimoku Cloud and the buy and sell liquidity, you should be good to understand whether a trade is bullish or bearish and where the entries are. Another thing that I've been doing is I'll go into, let's say, the PFA indicator, the original one. I made a version just for this bomb toolkit where I removed a lot of the stuff that I felt like wasn't really necessary. And you could just turn off the signals completely. And based on the trends, the institutional entry lines, and the buy side liquidity and the sell side liquidity. So it's really going to give you that edge of, okay, here's my entry line. Here's a buy side liquidity. If I enter at this entry line, there may be a chance of price getting swept and my stop loss getting hit at this previous low. So again, you could still take these trades, but proceed with caution. Don't go full port or don't risk a large amount on these entries if there can be a possibility for price to swipe, get us out, and then go in our direction. Here, we could see that it's bullish. We could see that there's buy side liquidity here. So we're going to enter at the buy side liquidity, and sometimes it'll hit and sometimes it won't. But that's what trading is. It's all probability. Now here, you can see that in this case, it did a wonderful job at the entry lines. So these entry lines still have a valid spot for you to anticipate your trade as we normally would, having it here. But now we have extra tools to allow us to mitigate our risk and protect our account by placing our stop loss behind it or being even more patient and waiting for the buy side liquidity. Because these don't happen as much as the entries that happen at the institutional entry lines of Profit Algo. The Profit Algo entry lines happen much sooner than, let's say, the swipe of liquidity. So that's where you have to make the decision. Are you going to be entering trades more sporadically, more often, or are you going to be reserved and just wait for those buy side and sell side liquidity sweeps? And to spend less time in the chart. And the way that I'm going to do that is I'm just going to put the alert right at the sell side liquidity or buy side liquidity, like I showed you earlier. Right here, it's done, walk away, and that's it. Wait for it. I'm working, I'm on the field, I'm doing an inspection, and as soon as that alert comes on, okay, now I'm on the chart. Now I'm on the chart. But if you're, let's say, on the chart and entering on every single entry line, you're going to be more glued. I still had that approach when I was strictly trading the price action model of putting the alerts and walking away. But I see that I would still get notified a lot more than, let's say, me only using the buy side and sell side liquidity. An amazing tool. Let me see if there's any questions so far. I didn't receive the liquidity indicator. Okay, so can you go to 1 hour, please? Yeah, we'll go to the 1 hour right now. The liquidity indicator, I'm going to be giving it to everyone as soon as I hang up on this call. Just make sure that you've sent out your TradingView username. If you haven't gotten the TrendSync simulation tool yet, that means that I didn't get your Discord username, your TradingView username, so I didn't send it out. But everyone here should have the TrendSync simulation tool already. Any chance of getting updated price action also. So this is definitely everybody's going to also get the price action update as well. And in the price action updates that is part of the toolkit as a bundle, I've made it so that way everything is cohesive and it has the right colors for it to look pleasing. But basically it is essentially the same as the 2.2. I just removed certain things on 3.0. So you'll still have access to the 3.0. You could still use a TRF line. You could still use all of that. But let's say if you want to use these new colors and use the candles of the bullish and bearish here, you can use the newer version. I would just use the newer version because it aesthetically is nice when it comes to the whole toolkit. But again, once you get used of understanding where the entry is with the price action indicator, you eventually don't even need the signals. You understand bullish and bearish, you understand the institutional entry lines, you understand trend, and now you understand where buy side liquidity and sell side liquidity is. Now, you can turn on the trend detection candles inside of the price action toolkit, but the simulation tool in TrendSync is much better. It actually has such a better representation on how volume creates price movement. We could visually see price action through the candles going from white to dark gray. Absolutely beautiful. You can see there's more volume, more sell volume, more sell volume, more sell volume. And the darker it gets, the more probability of there being a reversal. So we start to see it be extremely white. We could start anticipating a possible reversal to the cloud. If we see a huge push to the downside and it's getting darker, we could possibly see a reversal at the buy side liquidity with the candles being very dark. Please add, yes, the TrendSync simulation tool, Backend Order Matrix, and the price action Profit Algo toolkit. Yeah, insane. Look at these. It's so beautiful. It just looks so nice. I love this thing, man. It really does clean up the chart. All that clutter of all these different indicators, it becomes a problem when you can't read price movement and it's just all this clutter. Here it's just so clean, so clean. I love this thing so much, man. I love this thing. Look at this. It's beautiful, dark candles under the cloud showing a bearish momentum and then beautiful gradients showing a bullish momentum. Absolutely love it. And I can't wait to see everybody's results. I hope you guys are excited just as much as I am. We only have 2 minutes left on this call. really quick, is there anything else that we might want to say before I end it? We good. Let's go. All right, man. Shout out to the Prophet Algo family. Let's go. All right, guys. Thank you so much. Gracias a todos por estar acá. In what base liquidity is formed? In what base? The liquidity is basically where the orders are accumulated. So what I did was I asked ChatGPT how the orbs work with book maps. How does order flow work? And if you look at book maps, it tells you where orders are on the chart with these crazy bubbles, and it's just a headache. So I was going at it with ChatGPT, going crazy to try to figure out how we can decode it and make it something super easy and visual like what we have with the backend order matrix. And that's what it is. The backend order matrix literally tells you where those levels are, where the buy orders are, where the sell orders are. And it's just a matter of how well we are able to stay disciplined, not let our emotions get a hold of us, and also follow our risk management rules of 1 to 2 risk to reward. If it's not 1 to 2 risk to reward, don't take the trade. All right, guys, that's it. Less than a minute. We're out. Profit Algo team, lifetime members, PFA family, much love. Thank you so much for participating, and we'll catch you next week. Let's get these trades, get these profits, stay profitable, and I'll catch you on the flip side. Let's go.